Okay, getting started here with that in mind. Again, please read the risk disclosure, and I'll move this off the screen now. Just realize that risk capital is money you can lose without jeopardizing your lifestyle. That's the whole idea. Don't use your last 5 grand that's due from rent and other bills on trading. It's not the right idea. Better to take your time and learn more about trading from us first, and then you can gradually build up to that. But with that in mind, I wanted to start out by making a couple quick announcements. This is very important and significant. Um, First of all, is for the exact purpose of helping traders. I've been running my trading room now for several years with great success, and it just keeps better and better. I'm proud to announce that today we had our 66th winning day in a row, which is virtually impossible when you're trading the futures markets, but because the methods I use in Boomerang and everything are so wonderful and precise, and somehow I've just gotten, I guess, a little smarter over the years. Who knows what it is, but we've had our 66th winning day in a row today, and it's quite thrilling. I just know that I work real hard. I'm not so brilliant or anything, but I just work really hard at futures trading, and I really honestly have a deep desire to help traders be successful at the business. So with that, what I've done is I lowered the cost of our trading room from $250 a month to just $149, and we make regular, steady winning trades in the room. And I'll go over the last few days with you just so you can understand that. But I've reduced the rate. Who does that? You know, gives up a whole bunch of income just to help traders. Well, that's me. The idea, of course, that we'll be able to help more traders, of course, but the idea is it'll end up being a wash in the end if we get more traders to help. But that's not the main goal. Is that you'll only have to pay $39 if you want to try us out for a couple weeks, and then $149 a month after that. So that makes it a little more comfortable, and something I feel is very important to announce today here in the room. If you'd like to try our services, again, you can just go to this page here at daytradersaction.com, and then look under Trading Live with Mohan. Scroll on down, and you'll see here it talks about a blue-collar futures working trader, which means, you know, we get up, we put on our work outfit, we go to work in our home, which is always quite pleasant. Pat the dog on the head, say goodbye to the kids if they're off to school, or to your spouse, whatever she's doing, and then go in your room, close the door, and get ready to work hard for just 2.5 hours each day. It's only 2 to 3 hours a day, from 10 o'clock a.m. to approximately 11:30. Let's see, 7, 8. Yeah, about 2 to 3 hours max usually. 10 to approximately 11:30 each day is our regular time. We're out early in an hour today, and just go in there, and the goal is to carve out a paycheck, and that paycheck I am anticipating each day we make 3 to 5 times the cost of the room per month. In other words, so let's say two to 5 times the amount of the room per day. So the $149 a month, we're usually going to look to make $300 to up to $800, something like that, combined with all our combined signals. That's a pretty good deal, wouldn't you say? So give us a try. Come on in the room. You'll learn a lot about trading. You'll be able to see me in action working the exact Boomerang day trader system, which I'll show you the crude oil charts and the method we use today along with VOLMO, so you can see that in action. And I do the exact setups and trade using Boomerang day trader on crude oil. On the mini NASDAQ, I have a proprietary method that I use, which I use to dance around the algorithm predators and the riggers and all these other people in the room that we're trying to trade around to make within the first 2 hours, very quickly, as soon as possible. An hour and a half is usually what we're in the room, that amount of money. Now, just to give you an idea, I'll give you a sample of the last few days. Now, today we had the tax announcement coming in at 3 o'clock today, so I wanted to get out of the room early because of that announcement. Was already making the markets very choppy in the crude oil, and later, not so much earlier, but later in the mini NASDAQ. We trade the mini NASDAQ and the crude oil in the room. So Crude oil, we had two Boomerang setups in the room, and on the mini Nasdaq, I made two trades. Trade number one for 4.25 points, trade number two for 4 points. So we based that on a blue collar working trader account, which I consider to be 4 contracts and a small account. Small account means, well, it's $500 margin by most brokers, but you want more of that in your account. So I figure about a $5,000 to $8,000 small account. Go ahead and learn how to become a blue collar working trader with us. That would have produced, with the combined crude oil and the mini Nas trades, $795 today after commission. Yesterday we had 3 trades in a row, winning trades in a row on Nasdaq, plus 5 points, plus 250, and plus 275. I'm usually scalping in there for anywhere from 2 to 5 points. Sometimes I get a little bit more if I get a certain setup where there's going to be a little larger stretch expected. And it just depends on the market conditions. I rate each trade in my mind. We take the trade and then we try to scalp in and out and go for the easy money. So 3 winning trades in a row yesterday, plus 5 points, plus 250, and plus 275. There were 4 Boomerang day trader setups yesterday in the crude oil for a grand total of $1,096. And remember, so the last 2 days, theoretically, it took all the trades, you would be up about $1,900, and the room is only $149 a month. So how's that for a pal? And then I'll just go over these real quick, just a couple of sessions. The previous day, our 64th winning day in a row, we had we lost net 3.25 points in the mini Nas. That was a tougher, tricky day. That was when the market finally broke. That was Monday. Finally broke to the downside, or that was looks like it was yeah, that was Monday. Market finally got hammered to the downside. I was trying to buy those dips because that had been the method for the last couple months, really. And I knew they were going to break. I knew there was something wrong, but I was just kind of overworking a little. So we had a little bit of a minus 3 points, which is nothing that day. But on the crude oil, we had a fantastic day, up 3 trades on the crude oil. The next day, I'll just go over these real quick. Friday was up 650 on the mini Nas, and in a very odd day, there's absolutely no crude oil setups on Friday. I hadn't seen that in years. No crude oil setups. Very weird. But that's the markets for you. They always throw you a curve every now and then. Thursday the 21st, we had 2 winning trades in a row on Nasdaq, plus 375, plus 4.25 for 8 points on a blue collar working trader account. That's $604. And 2 winning trade setups in crude oil for $191, and these are after commission. And then on Wednesday, that was the big FOMC announcement, the interest rate announcement. Remember, they had the TV conference and all that. I don't usually trade the mini Nas in those days. It's too erratic and strange. We had 3 crude oil setups on Boomerangs. That just gives you an example of recent trades. So we try to go in every day and have a winning day and make our money early, and we're only looking to trade an hour and a half to 2 hours to do that. And with the new system, Fridays will be closed. Now that only adds, or that only subtracts 3 days from the month, because we, prior to that, for many years, have always been closed every 3rd Friday of the month, which is option expiration. Anyway, so that's the announcement for today, and thanks for listening to that. So what I'm going to share with you today, I'll start out with a plain chart, is the VOLMO, is a new indicator that we have that you can receive that VOLMO from us. It's only $195. I've kept the cost very low, like I do with all of our services. And like I said, I just lowered our room service so that you can benefit from that as well. Come in for a couple months, get some training, do whatever you do with Boomerang or whatever, but at least you come in, get some training, watch me tackle these markets and get some ideas and input, because every day we learn something new in the room. It's quite exciting because the markets are a teacher and they always teach us different things, and especially now we have the volume measures, which are quite valuable for learning more about the markets. So let me show you real quickly on that. Now, as you know, everything is launched off of our Boomerang blog. For all things Boomerang, just go to the Boomerang blog at boomerangtrader.com, and that's where, if you're signed up in the room, which I recommend, if you sign up, then you'll get our notices. But that's where you'll end up on the blog page, and that's here where you signed up today for the training. Just below that is the volume momentum indicator, and you can also find it on our resource pages, which is the best page to look for all the really significant changes or new things relating to Boomerang. So the Volmo, I was not planning to release this, but I decided to release it because I know what a great benefit it's been for me for many years, and I just decided, let's put this out there and let the traders benefit. There are no good volume indicators in the market that I've ever seen. I don't know, maybe there are, but I've been looking for 20 years, and I've asked our thousands of traders to send me any hints of anything they see, and no cigar. I just 20 years, not 2 years, not 20 months, not 6 months looking around. 20 years of really looking. But so we have a training video here, and we're going to do some more of that today. And this will be recorded today, so you can watch more about that, and you can learn about the volume meter there. So thank you very much. And again, for the if you missed that information on joining our trading room, just email me at mohan@daytradersaction.com, and I can send you information for that. But daytradersaction.com is the site where you can sign up for the room. I have a question coming in here from Michael on that, so that's where you can, and Perry also mentioned that, so you can join the live trading room at daytradersaction.com under Trade Live with Mohan. All right, so let's get started. Now, if you own the Volmo, which I highly recommend for all traders, because volume, first of all, you have to understand this is not just another indicator. All indicators, 99% of them are based on price movement. The price moves, the indicator adjusts to the price, sets up the averages and everything, like Boomerang. You see all these things here, like Hyper Scalp, which I've got today. I'm going to show you some exciting things with Hyper Scalp. Everything's generated off the dynamic trend bands. Everything is generated off of price movement. Well, volume leads price. In other words, the volume will shift before price will shift. And so having what I say is the first indicator that I've seen. That's all I can say is what I've seen. Maybe somebody's going to argue and say, oh, no, there's a such and such. Well, I haven't seen it. But this is the only indicator I've ever seen in 30 years of trading that tracks the volume with the precision that I've designed the Volmo to do. And it's going to be a great advantage to you, and I'll show you why. Because when the volume shifts, you're going to get a price shift. Now, it may not necessarily be a complete shift in the market to another direction or something, but it sure is a significant indicator that something is shifting. Let me give you a classic example here. Now, I'm not even sure what day this is or anything. Oh, let's see, they say 8/8. Oh no, sorry, that's the time. 9. This was 9/27, I guess 2 days ago. Look at here. See how I'm using a plain chart here to make it a little clearer. See how the volume's picking up here, and it's kind of whipsawing a little. Then you notice how these are the Volmo. The Volmo means volume moving at volume momentum. These are momentum indicators that I built on top of this wonderful histogram for measuring the volume. These spikes are showing the volume. Now, it's not showing how many contracts, but it's showing different levels that I've developed for you here that show when they spike to those levels, the strength or weakness of the volume thrusts. So once you start getting green histograms crossing over the zero line, that means bullish, or not bullish necessarily, but buying volume is coming in. When you get a shift in the momentum, which is this thin line crossing this thicker line, I usually have this line dashed, and I don't on this because I put it all together real quick for the webinar today, and I wish I would have done that, but it's a different color, so that's already fine. That's significant for you, but I recommend you turn this into a dashed line. I find it easier to read. You might too. But notice how the volume starts spiking and the prices are going up. And notice how when that came in here and crossed under or started to shift right here, this was your first hint there is a volume change on this candle. And when you saw this first momentum line cross up over the zero line, and especially our rule is when this thicker line, the momentum indicator number 2, crosses, that's a definite volume trend change, and the volume is trending and changing there and probably going to respond in the price. Well, you can see what happened is as they came up here after the shifted and buy volume here, and right in this candle here, when the main bias shift came with this thicker line crossing over this black zero line here, notice how price stabilized, but all of a sudden they caught they got driven to the upside. Why is that, and why did they fade out? The volume increased substantially here. Prices started moving up, and people that were trading responded to that and jumped into the markets. But you can see as they jumped into the markets, this was a lot of either sellers getting stopped out and or new buyers saying, oh my God, the market's running without me, I'm going to jump up. Well, it just so happens because we, you and I, the purchasers of Volmo, own the Volmo, we can see that as this price is spiking higher, there's trouble in Houston. We got a problem. That's what they say in NASA. Remember that famous statement on the spacecraft? Houston, we have a problem. I don't know what they saw out there, but they said, and the prices were spiking up, and all of a sudden we see red histograms of selling volume coming in across under of the Volmo, the momentum averages here crossing. There's a definite shift in momentum as prices spiking higher. This is the difference between a volume, volume-based indicator like Volmo and an indicator based on price. You see that? This is telling you, even as the price is spiking higher, this is going to shift at some point because the prices are going to follow the volume. And sure enough, right here at the peak with definite shifts in the bearish color on the Volmo and a shift under the zero line here, you had a crunch right off that high, and all those poor buyers up there that came in late got hammered very quickly to the downside. See how that works? So it's pretty amazing. And then spikes that occur, which off of this, because of that shift, created a hard volume spike. A lot of selling volume came in as these buyers up here got stopped out pretty hard and fast. And then when you get a drop down here, you can show it was right at the peak of a bottom spike. And then, of course, the prices responded by reversing from 11 all the way up to 18. That's on mini NAS, that's a very nice little jump there from 11 to 18. Just seeing the volume peaking down here. This green up here, and on the upside red, those are volume spikes, and very often those will reverse dramatically. Not always, but a lot of times they will, and you can take advantage of that if you're a scalper like me and a kind of a little more of a Rambo trader. That's what we do on mini NAS in my Day Traders Action Room. We don't follow the exact boomerang method, although it works beautiful. I'm going in there trying to get us out of the room in the first hour to 2 hours, and I'm trading other little methods similar, like here. I might have grabbed this spike and bottom there and watched them jump I would have taken 3-4 points maybe. I'm not going to catch 8 points most likely, because on a deal like this, I'm just looking for that little reaction. 2, 3, 4 points, I'm happy as a clam when I just get a little reaction like that, because keep in mind 4 points or 3 points, let's say, on 4 contracts is about $230 after commish, and that's a nice little couple $100 in the hand. So with that in mind, I'm just showing you the plain chart so you can get an idea of how the Volmo works. And once that thick line crosses over the zero line, even though you might get reactions in the opposite way, that's a volume trend, a bullish volume or buying volume. Not necessarily bullish, prices are bullish and bearish, but buying volume. and selling volume. The buying volume has shifted and is trending up. Buyers are piling on the volume, and you can see from right where that occurred down here, the prices are starting to kick up. And then, of course, as in this case here, as the volume accelerates, they really take off. And here they're exceeding this line because this is a volume buildup, and the volume went nuts and they really piled on here, pulled back a little, and the volume was still so strong it just kept piling on after this little shift here, and the colors rematched. They just came back in and kept piling on. Well, finally, you can see a little bit of divergence here. Well, you're seeing a double kind of same level volume spike, and then once again the shift here, and then crossing back under this extreme line here, they start pulling back a little bit. Not much. They kept kind of going higher. Even so, the volume meter is going to show you the shifts. And they are not trade signals necessarily, but you have to learn how to use them in conjunction with Boomerang and other proven methods for trading those volume moves. But once you get used to using this, you're going to just love it. Here's how it works in Boomerang. First, I'll show you mini NASDAQ on Boomerang because it works beautiful. On NASDAQ, I just say, because I'm in the room and I don't know. Say we have a Boomerang trade where we scalp for 3 points on Boomerang according to the method, and I'm in the room and I go in and I catch a trade and make 3 points. Well, I'm trying to get out of the room in an hour and a half, and there may not be another Boomerang trade for another 45 minutes or an hour. I don't know. There might be, but I have no way of knowing. I have to wait for, as you know, with Boomerang, an entire shift in the dynamic trend bands, or if it's trending, a second level trade. And if the trade I just caught doesn't look like it's going to go second level, I got to wait for an entire shift of the dynamic trend bands, and that sometimes can take 30 minutes, 40 minutes, whatever. And I like to get in the room, like I showed you a few minutes ago when we started out here. I like to grab a few 2-3 trades. I can make our target goal every day in the room is 8 to 10 points, 8 to 12. If I get in a trade, say where I'm up 6 points and it ends up being a 6-point winner, then I'm going to get 12 points. But that 8 points is going to produce a $600 paycheck after commission on a blue-collar working trader for contract account. So that's what's exciting about it. So that's my goal, is just go in there, get that paycheck. I learned that from floor traders, by the way. I used to go to Chicago and meet with people I knew there on the floor. I'd stand right by the rim of the pit and place orders. I was trading back then. I'd place my orders. I had some special privilege. That was back before electronic trading. You used a phone. You were either on the floor or you had to use phones, and you'd get these companies that would advertise we pick up in one ring, and that was the big thing. We promise to pick up the phone in one ring, and they'd know who you were. You say, yeah, hi, it's Mohan, buy 10 at the market, and they go, okay. They knew what contract I traded, and they go, okay, you're long this price, and where's your stop? And you'd say such and such price, and everybody'd hang up, and you'd sit there and sweat and have your finger on the phone and the dial. It's not like nowadays. We got it really nice nowadays, that's for sure. Be grateful. We have got a very good deal nowadays. So let me go over a couple things on this NASDAQ chart, and that is, it's called combining volume with the hyper scalp. Now what I've done here is applied the hyper scalp, which comes with Boomerang. When you purchase Boomerang, you'll get my free gift of the hyper scalp with that. Now just a little bit on hyper scalp. Hyper scalp is an indicator that I developed, which is a combination of several important tools, and it catches the price when it's finishing a move, and then it shifts to the other side and starts, what we call in the industry, starts squeezing the price, in other words, squeezing the shorts of the long. It's a term used for many, many decades on the floor. The shorts are getting squeezed. The longs are getting squeezed. That means they're long, but the prices aren't pushing any higher and they're starting to pull back. the longs are getting squeezed and it's starting to hurt. So this is an indicator that measures that squishing and squeezing. It goes from a squish to a squeeze, when you're on the wrong side. It's first a little squish, and we have to tolerate that as traders. But when it starts squeezing, you gotta get out. So what we do is use the hyper scalp to measure when the market's going to start squeezing the opposite side. Now let's go right over here. Let's start after 10 o'clock on this day. Again, I'm not sure what day it is. Let me check over my little thing here. It says 9:25. Yeah, 9:25. This is a West Coast chart. So at 10 o'clock here, the market, since the opening, I never trade the first half hour. Usually don't. I just let them wiggle around and flip around and let all the what the traders on the floor used to call the amateur period, where the amateurs go in and they can't stand to have the market open without being involved, so they jump in and start trading, and they just wait, and then they try to pick out a trend, and then they jump aboard. That's what the floor traders like to do. They can hear that in the old days from the volume on the floor, and the screaming level, and all kinds of stuff you could do. But so here's the market, and forming a boomerang type trade. You've got the dynamic trend bands above each other, and the market makes a little minor pullback here, which is fine. Nothing really to do here because there wasn't really a setup until things started turning around. But one thing you would note too is that the volume momentum indicator is flat on the zero line. In other words, it's going up, but there's just little tiny minuscule spikes under this grayish colored line here. Then they start falling lower, and you do have the key momentum line under the zero line, so it's going to tend to see these higher pushes fail and try to dive lower. But as it's diving lower, the market just wants to go higher, so it's picking up here. So now you get your spike above the zero line, the green histograms here picking up, and then notice how there's a crossover here and here of the zero line. That's the volume saying things are turning bullish. Now you had a buy channel open up here at that same time on Boomerang, and you have a squeeze getting started. You have a new histogram pointing up just a little. This one points up better. You want to see a little spike in that thing, because otherwise sometimes they'll stay flat along the zero line, but you get a little spike moving higher, and now you got the volume on your side. You didn't have the volume on your side over here. It was all just kind of flipping around. But now you've got that volume starting to show some real strength too, with the momentum line, the key momentum line, the thicker one, pulling across the zero line right here as the buy channel opens, and you've got the histograms here on hyperscalp moving higher. So as they come up here and they pull back the sig line, you're getting a lot of volume coming in, and they're starting to thrust higher. It's really responding on the upside. So with Boomerang, you buy a pullback the sig line, which is marked with this blue dot, and you trade for 3 points. 59.03 jumps up to 13. Obviously there was 10 points there, but you're just looking for 3, and then you wait for the next trade. Now here's the key thing. Notice once again how as they're jumping up higher here, you're starting to get a shift in volume. See that volume starting to weaken here. Here you got, on this candle, you have the main histogram, the momentum line number 2 turning red. You had an initial signal up here on this candle where the momentum number 1 turned the magenta color. They crossed over on this candle, and that's telling you volume's weakening. Even though the price is hanging up here a little bit, starting to pull back, but it's hanging up, and that's telling you in advance, watch out, because they're probably going to hit the buyers up in here that are still exuberant, enthusiastic in here, are going to start getting squeezed. So here comes the hyper scalp starting to open and really starting to put pressure on those buyers that came in here. They're starting to get squeezed, and now all of a sudden you have a boomerang day trader signal with, if you recall, our new modification rule is it's something new that when you're making a reversal off a relatively extended move, you do not have to wait for them to cross over or match color. That's always a good thing, a very good confirmation, and it will happen still, but this system now with a new modification rule, let me show you. This was I've got the exact date here when I introduced this officially under resources. Right here, it was the last post. This was August 8th, so it was last month and the 8th. New enhanced method for boomerang entries on reversals using the Cobra. So open that up. You can watch this webinar that I did, and I officially announced it and explained this is now an official new part of Boomerang. That's why I have the blog, because we always have to stay vital in our trading. Sometimes ideas come up or new things prove to be true. I prove them out. I research them. A few lost weekends and a lot of charts and tracking and simulation trading on, 30, 40, 50 sessions, and I say, yep, it's absolutely real. So that rule simply says when the market's made a run and you want to get short and you get a new channel, a sell reversal channel on Boomerang, you can make the trade after the Cobra, which is going to have to match the same color as dynamic trend band number 1, but if it crosses, in this case, under the dynamic trend band number 2, that is sufficient permission. I call permission because it's very militant-like. It's just like if you have a drill sergeant and you're a brand new recruit, you're a new boot in the Marines or something, everything you do has to be permissioned by the drill sergeant or the protocol. You don't do whatever you want. It has to be permissioned. So I say that in the room because so many new traders, which we specialize in, are just winging it. They're getting bad case of webinaritis and indicatoritis from all this crap being slung at you on the web, and most of it from people who don't even trade the markets themselves. They're self-professed experts who don't even trade, and they're trying to sell you stuff, and traders lose a lot of money because they just try to put this together with that and this together with that, and they have no disciplined approach. So with Boomerang, I use that term. When the Cobra now crosses under the dynamic trend 2, that permissions you to take the first pullback to the sig line, which is right here, and there's your 3 points. That's the protocol for Boomerang. Now I realize they made a lot bigger move, but that's the method. So you can see there's 2 winning trades right there. Hey, if you had 4 contracts on, you got a $500 paycheck. Go home. Stop trading. Go do something else. Have a good life, It's the way I look at it. It's the way the floor traders I met did. They couldn't wait to finish and hit their goal, get off the floor and go out and hit the bar and have a couple beers and just feel good about, got off early today. They didn't hang out on the floor all day and get their brains beaten out. And traders, they'll catch a big runner once in a while and they think it's going to happen every day, and it's not. Usually going to get cut up, so it's better if you can make your money and get going. But anyway, while this was happening, the Cobra crossed under dynamic trend, flattening. It's got to be flattening. Dynamic trend band number 2. It doesn't matter if the color is still the same because we're changing that rule with this modification. Obviously, the volume's on your side, and especially right here where we got short, you're confirmed here why a complete change in trend and volume with this thicker red line, bearish colored red, crossing under the 0 line. That's a new volume trend. And then, of course, with that new volume trend, they proceeded to blast the market lower and lower and lower. Is that day on the 25th last week where the market just started really getting hammered? Or what was that? Was this Monday? Yeah, this Monday. I had mentioned in our trading room last Thursday, I said something shifted here. Something is weird. It wasn't the North Korea stuff or the this or the that. It was, I said, something's shifted, and I think we're going to start seeing the price get hit. Well, they keep boosting them up and all that, but that's a whole other issue, which we talk about in the room, but I don't want to talk about it here. Whole other issue. But this is that day, and boy, they sure did. Monday, coming back from the Friday, uh, and then the weekend, and wow, they just started hitting them really hard, and then they reversed them back. But again, on the hyper scalp, you see it peaking down here near this yellow line. That's a 5-point line there, and I've just marked it with movable horizontal lines. You can put permanent lines on there, and while I'm bringing that up, because this is a boomerang trading webinar for our boomerang traders, just so you know, let me show you this real quick. I just put a horizontal line, and all you do is you go up and you hit this one here with the pencil, and it'll let you put a horizontal line in there. But under resources here, if you scroll down, I think, let's see, where is it? I think it's on page 2. Here it is. This report, how to apply constant line levels to your chart. Constant line means it'll constantly be there permanently on the chart once you install it, and it just shows you, it's not hard to do, but you got to know, you got to follow the steps, and I outline those for you here in this video. It's a short video how to use constant lines. These lines here may stick to your chart for a couple days on NinjaTrader, but sometimes they'll disappear if you reboot your computer and close down Ninja, reopen it. After rebooting, sometimes they might disappear. So just keep that in mind and apply the constant lines. Now notice this choppy climb off that heavy drop there. Yeah, this is fine, but notice how this red, and this is in the video that I have here on the Volmo. Notice how this faster momentum line number 1 is not even getting up to the yellow line. The volume's weak. Yes, it's climbing, but it's got holes in it because you can see this number 1 momentum is not even punching up towards this yellow line. So the overall trend in the volume is a little weak because these lines here are going to measure that. They're going to give you measurements. That's why I have them in here. Just looking at these spikes, you can't exactly tell what the trend of the volume is or the momentum. And you can see here it starts shifting and weakening right on this candle. Notice that? Where this changes momentum a little bit here, and then clunk. Now keep in mind too that that was from 69 down to 62. That was a 6-point or 7-point drop. If you had seen that coming, which you could have with the Volmo, first of all, you see it's kind of weak, and then you see this shift here. You might have been able to catch that drop. That's not part of the boomerang method, but I'll tell you what, I know how smart a lot of you are out there. You're going to do your research, and you're going to work with Volmo for a while, and you're going to see those. It's very intuitive. Because remember, volume front runs price. And when we trade, we're trading price. We have our chart trade or whatever on. We're selling at the market. We're basing that on, I want to go short at this price. Well, when you see the Volmo shifting, like for example right here, not only did they both match, but you actually got a miniature little sell sign that the selling volume's kicking up right here when you had a green boomerang candle. You see what I mean? So you're going to get real good at this, and you're going to be able to scalp out some of these little changes. I'm not officially recommending it because when I run my boomerang stuff, I like to stick to protocol because that way everybody's on the same page. Especially the new users of boomerang. Don't even think about it. Just follow the boomerang method. Get some points built up so you can get really good at making money. The key is to make money. Did you catch that? The entire absolute total complete goal of trading is to make money. I know it can be fun. I know it's intellectually stimulating. I know it can be a grind and it can be painful, but the ultimate goal is it's a business, and you don't go into business to break even or lose money. You go into business to make money. So keep that in mind. Use Boomerang. Trade the exact method right here. You would have had, see how that Volm or that hyper scalp, see how this Cobra crosses under this flattening dynamic trend band number 2? And you got volume shifting to selling volume with the trend move, with the thick line crossing the white. The prices are still spiking up on here. See this? As far as this is a Boomerang setup. Yes, the Cobra is crossed under. You don't quite have a flat dynamic trend band number 2 yet, but it's crossing under it. Now it's shifted to red, matching the Cobra. You can get in early on this Boomerang trade here, and you see that the selling volume is accelerating, and now the trend has shifted with the Volmo crossing under that. You got a squeeze opening up here. They're going to start squeezing these longs up here. See that? This is a red squeeze. That's a sign that these guys up in here who are hanging on thinking there's going to be more they're getting squished right here, but they're about to get squeezed, and that's when it comes in here and it starts twisting their wallets to where they have to bail out, and that's when you get what we call a selling pile-on, and that's measured also on Volmo. But you had your hints right here on this candle with prices actually spiking higher, and you see right here that the shift in the sell volume trend was moving lower, and you got the hyper scalp telling you, hey, something's going to happen to these long traders here. And so you get short on the pullback to the SIG line right away here, and it was a quick trip down for a 3-point gain. Or if you had some idea that, well, the volume's just, see, you're going to learn this as Volmo will teach you this, and you'll learn it from experience. You go, well, that volume trending is shifting pretty hard. Maybe you hold it for more than 3 points. People ask me all the time, well, how can I make more points? I go, well, you just practice with Boomerang, and you will. I designed the system for 3 points because over and over and over, 80-90% of the time, that's what you'll get. So I wanted traders to start and make sure and go in there and get the 3 points over and over, 3, 4, 5, 6, 8 times a day, and do that and add more contracts if you want more money, rather than necessarily trying to catch bigger moves. But using the volume trend, you'll be able to anticipate a bigger move. Here's Boomerang short here at 69.75. Obviously they come down to 62 very quickly. You see the new shift in the volume coming in. You see the squeeze, the hyper scalp starting to crunch them down there. You might consider holding when you see a combination. Here's a key thing I'm telling you here, and this is only possible because I released the Volmo. When you see a volume shift, especially coming off a rather wimpy volume move on the upside, when it does shift, it's probably going to be strong in most cases, and you're getting this new hyper scalp starting to put the squeeze on the longs here. You can always consider, with the combination of these two, holding it until the hyper scalp goes down at least to the 5-point first level exhaustion down here. See that? So if you had, you would have covered the short into this area here, which was from 69 half area, and the low on this was 62. You see what I mean? That's how you can go for larger scale points. That's one way. So we got this recorded. It'll be something you can go over again and learn. And again, it's like the same old routine, but what the Volmo does is just makes it easier to perceive things like this routine. Now notice how these, real quick on this, and then I'll shift over to crude oil. Notice how you're getting this movement under the yellow line, not only spike, and you're hitting a spike level here. Now, these are volume spikes. Here's a triple volume spike. That's probably close to a reversal area, and you can see that was very near the low tick before they turned up again. The triple tap on 1, 2, 3 on volume spikes, that's all these sellers just giving up and getting hammered, or all these buyers. that were long are trying to buy dips. And you can see what happens right here as they cross under this. In other words, as the momentum number one and number two cross under yellow, then momentum number one crosses back above the yellow line, and number two simultaneously. You're now using, instead of using the zero line with them both crossing over the yellow line, you're now using the yellow line and the recross back up after this triple hammering down here on the exhaust line as the point to watch for the reversal. I hope you're catching that. I know it's these seminars get pretty intense. You got to really expand your mind, but just go over these parts again. When you see the two momentum lines crossing under the yellow line and a triple tap, in this case on a spike extreme measure, you're now, instead of waiting for the zero line, although it's still valid because here it is crossing the zero line and there's your new trend, there's your boomerang signal, but I'm just saying you can use the yellow line recross as a point to measure where the market's getting ready to turn back up from that level, which was in this case 52.75, and the entry on Boomerang officially, it was like 2 points higher. It's not a big deal, but the idea is you can watch for that and in confidence see that now they're crossing back over. Then of course when the squeeze starts here, see Hyperscalp starts squeezing the shorts here, and this is the shorts not quite perceiving it yet, but we can see the volume is shifting. Things are moving up above it. The volume trend is coming in on the buy side. The buy volume's coming in. These shorts who are thinking it's going to go way down there, they're short and they're thinking it's going down here. And we're looking at our charts with the new VOLMO 2 that I've gifted to you here. And you're going, no way. The whole thing's shifting. Oh my God. Thank you, Mohan. You're welcome. You can see crystal clear the selling volume is drying up completely and buying volume is coming in. And Boomerang, of course, is telling us the same thing, but it's just a nice, wonderful extra confirmation. When you, the main rule with Boomerang, wait to see the volume moving high, the new shift in volume, and wait for the momentum line number two, the thicker green line or red line, to cross over the zero line. Get into your Boomerang position and you're going to be trading with so much more confidence because you know you got the volume on your side. You see that? And you'll know too, as the price is moving up, you can also track the Hyperscalp and watch for that to move. But here's a classic example though. Now notice, and then I'll go over to crude oil. It's the same thing essentially, but I'll show you how we trade crude oil in the room. It's moving up here, right? But look at Hyperscalp. These were the initial thrust, and they're putting in higher prices, but lower thrusts on Hyperscalp, which is fine. The price can still move up, but that's telling you something's kind of internally a little bit weak. And now look at here. You're getting a volume thrust here. You're getting the momentum line number one crossing over the yellow line, and then both of them just kind of hovering on the yellow line as prices jam up here for, again, what is a third weaker spike on the upside. Yet, okay, you're getting a third spike up on the volume after two taps here, almost three, but the price are jumping substantially with a much weaker and rather kind of wimpy setup here. It's okay, but it's not really thrusting that strong. And especially here, you see they're really thrusting hard, but it's substantially weaker volume. And then, of course, as these lines cross back under the yellow line, now you're watching for that measurement. And again, it's not a measure, it's not an indicator on price. That doesn't mean the price immediately is going to go down, but it's telling you that there's a problem here with this upside here. It's starting to get real flaky, especially with the momentum lines turning bearish. Now the histograms start turning a little bearish and they pop up a little. But then as things continue to, even if you're short up here, for example, with this configuration and they start popping up here, you're not going to worry as much because you see how the red line has come down under this gray line, another significant sign of things weakening. So you're going to be able to hang on like a brave soldier there. Not pleasant, but that's trading for you. And then as things start, you start seeing the red histograms, and then the cross under here, that's where you get the downside crunch with the selling volume carrying over. Now, oddly, and this is important, the volume is in a trend down move, but the riggers, I assume it's the riggers, they're always trying to prop the markets up. The prices are trying to spike up, but it's a hopeless effort because they're trying to spike them back up, but look at the volume trend. So you can see on Hyperscalp, it's trying to spike back up. It's almost hitting this key yellow line, but it's a fade because you got the dynamic trend bands crossing over, and say you got short here and you didn't get out in this dive down here and it jumping back up here, but you have confidence that you're going to watch very carefully for that second level trade. Here it comes here, and you go short here, and a new hyper scalp pressure move starts here, and they get blasted lower. So that's how these two tools can help you with your boomerang trading, and I appreciate you watching that. Let's go over to the crude oil chart now, which I have here, and I'll do the same thing. I'll just expand it out over the mini NAS chart. And there we go. So crude oil, I mean, honestly, a contract is a contract is a contract. If you got volume moving on it, and the volume meter will tell you whether the volume's strong or weak. Essentially, it's a chart is a chart is a chart is what I should say. They all look the same. I mean, really, if you look at this, it doesn't look much different than NAS. Crude oil will tend to run a little better, and I find that with a boomerang signal on crude oil, a lot of times there is more of a chance of a continuation than with NAS in most cases. But that having been said, I'm just grabbing a random chart here. I don't even know what day it is. Let's scroll back here. Now, crude oil, we start measuring those before the room opens because we have many boomerang traders in the room who are trading crude oil before we open the market, and we always track those and put them on the track record and show these were the setups that occurred, and everybody, and that way we all just work together and stay on the same page, which is so important. You can never assume anything in trading like you got it all handled and everything. I never do, at least. I mean, every day I come in there and say, okay, what's the market going to do to try to screw me up here and take my money? And I'm always very vigilant in that way. Now, the difference on this chart you may notice is, first of all, I've got the bias index number 2 up here. This is a what I call a market force index, telling us when the force in the market, it's different than the hyperscalp or the bias index number 1, but it's telling us where the force is in the market. And you can see turns green and prices trend up, 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 and then it starts shifting down towards the zero line, and there's a faltering in price, and then it kind of goes back up. So you know it almost perfectly tracks the shifts in the price for market force, or the momentum force, or whatever you want to call it. So the rule with that I use in our trading room in trading crude oil and boomerang is, first of all, the other things we have on here is we have bias index number 2, the market force indicator, VOLMO, and I've got what's called the price pressure bands. This is part of my boomerang roadmap package. Now, roadmap is a complete course in how to read the underlying bias of the market live, along with 6 new indicators. You don't have to use the whole thing. It'll clutter up the chart a lot. There's a lot of stuff in there that you can use or not use, or use sometimes and not use others. But There it is. I'm going to show you that. It's again under resources. It was new back then, so it says new here. Amazing Boomerang Roadmap. It's the first course that I've done. It's a course on reading the underlying bias of the market on short-term scale and big picture scale on a day trading environment. It's not for multi-day, but it could be used that way. But it's for on higher time frame charts. It could be easily used that way. But for day trading, and in the package, it includes 6 different new indicators, and one of those is the price pressure bands, which is worth the whole course is only $295, and there's 2 hours of me discussing all these tools, these amazing tools. $295. I mean, and you'll see it in one trade. You'll make that in one trade using one of the tools. That's how valuable it is. What to speak of getting to hear me for 2 hours talk about all this stuff. But it is, everything in there is vital to trading and wonderful. So precision price filters, that's the other tool we use for trading crude oil. The price pressure bands. Tick blast we don't use. Short-term bias channels can be used if you want. They're very valuable. I use them, but I don't display them in the charts. I don't like to have too many lines. There's enough lines on there anyway, for God's sakes, but every single line and every single color and every single shift is absolutely vital and important to what we're doing in the room. And the reason is I don't like to lose. I hate to lose. I don't mind losing because that's part of trading, but I don't like it if I can avoid it. So with the price pressure bands, all that means is we're watching for the dashed line to cross under the thicker solid line. This forms the price pressure bands. It's kind of a reconfiguring of a sort of, it's like a mega Bollinger Band is what it really is. I don't mind saying that. It's based on that, but it's redesigned to show you which Bollinger doesn't have. It shows when the price are going to start fading and stalling. For example, here, and again, we base the trades at, on this chart, 5:45 West time, which is 8:45 New York. The market on crude oil is at 9 in New York, so we try to get in 15 minutes early and start looking for boomerang trades. So the first rule, now this is before that, so let me go to one that sets up after that. And all the regular rules of boomerang apply here. Here's just a bunch of whipsaw occurring. There's a lot of that lately, but I show you a classic case. Here's a buy trade coming in. The filter opens up here. The filter is this whitish brown line crossing the orange line. You see that? Let me open it up here. And this is kind of a little scrunchy little period where the market took off, but it's just as valid. So we look for the whitish brown line to cross over, in the case of a buy trade, the orange line. That's a filter, so it's just there to filter it. Obviously, in this case, the dynamic trend bands are already crossed to the upside, and the cobras across and above, which it will in most configurations like this, above the dynamic trend band number 2. That other rule only applies to when you're coming off of a move that made a runner. So the price pressure bands open on this candle. You see that, how this dash line pulled back there? They're so valuable. You got everything in place. You buy this pullback to the signal line here at 28, and in the room, the first thing I do, I show, okay, we're long here now at 28. I immediately go in and put a line on there, and I say 28, and I say 38. I mark 38, and then I say the rule for trading boomerang is 8 to 10 ticks. So I say 38 minus 2 is 36. I put that in there. We'll have the entry there, and I'll say, okay, so, and then I'll take 28, and I'll say 28 minus 13 is 28 minus 10 is 18 minus 3 is 15, and I'll immediately go down here and put a line there. And there, I usually have some colored ones sitting there. I say that's our airbag stop. We don't want to let them go that low, but that's there in case there's an emergency. And so now here we're long, and we're looking for the prices that jump up in between these two yellow lines, which they see they did right there. 28 ran 37. You want to scalp that trade out, or if for some reason you want to hold for that extra tick, I don't recommend it, but you can see after pulling back slightly below the entry, they shot back up again. But once those price pressure bands close, like here, that trade's going to go into a little bit of confusion as far because the pressure for the upside has been removed a little bit, and so that's why they're herky jerking along, and then finally uh, they took off again in a spike fashion. But you want to, when you're trading that crude oil, you want to go in there and grab those $80 to $100 bills per contract. So you're long here, price pressure bands open up, and when that price runs up there, right in that level, go over your long, hit your close button. I usually, when I exit trade, I like to use a close just to make sure everything's closed out, especially if you got multiples on. You don't want to leave one straggler in there accidentally, which happens in trading, and all of a sudden you go, why is my thing still running? Oh no, I'm still long one, and the price is collapsing, and you give up some of the profits. So that's my advice. It's up to you, but I get long or short, and then I hit the close to get out of that position. Or, of course, if you're long 5 and you're taking one off and one off and one off, then you got 2 left, then you close them out. That's different. That's a different scenario. But if you're buying 2 and you're holding 2, that's a better idea to just close them out with that. So that's one setup there. Now again, a lot of lines, but you can see that every single one of these was valuable. I've made these lines on the price pressure bands as thin as I could, but you got to be able to see them. It's no good if you can't see them. Here's another one here where it's kind of weird, but big spike move down, sell channel opens up, the price pressure bands open up. Is one of the real key things to getting a winning trade in Boomerang. Is watch those price pressure bands. The filter crossed right as this candle opened. This next candle opened and shot up. The filter opened up with the slope down, and there's that like scooping effect, kind of putting a umbrella over the prices, because that's important, because we're going to be using that orange line as a stop assistant, when to get out, like a mental stop level that we should get out if the price start jamming too much beyond that orange line. So that's the real value of the filter, not just to confirm the trade, but to tell us where to get out. Orange line in conjunction with the dynamic trend bands. If they start pushing too much up there, something happened to the trend, and we just the micro trend, we want to get out. So here's everything's lined up here. You go short here at 33, same thing. Here you're short, and as soon as I get short, I go, okay, we're short 33, so I go minus 10 is 23, right? And then I say 23 plus 2 is 25. I mark that little zone. This is exactly how I trade in the room. I watch price pressure bands. I'm short at 33, nervous as all get up, because even though I've been trading 30 years, it's still, every trade you get a little nervous. Nothing wrong with that. It's a great actor once said, I think it was Robert Redford, they asked him, oh, you still get nervous when you're going to do a scene? He said, if I don't get nervous, I figure I should quit the business, because I don't have the juice anymore to feel nervous, to really put on the best performance I can. And that's how you should be in trading too. You want that nervousness, but channel it in the right way so that you can use it to your best effect. And then of course, always, and you can do this of course automatically with the brackets. You can put a bracket on. I don't know if I have it on here. No, I don't. I use it 2020 mostly, but you can build a bracket, and it's easy to do. You just have to go to your Ninja Trader, look up, where they have the video tutorials on how to do it. It's quite simple, but you have to learn how to do it. It's simple, but it's not a piece of cake. You have to figure it out. You have to use the dome to set it up, and then it goes on the chart trader. But if you need any help with it, just email me and I'll help you. Short channel, price pressure. Step 1, sell channel, candle closes. Are the price pressure bands open on the downside or not? Yes, they are. Great. That's step 2. Step 3, is the filter opened up? Yes, it is. Are the dynamic trend bands matching, or has the Cobra crossed under, look at this, crossed under the dynamic trend band number 2? Yes, yes, and yes. Trade the pullback to the signal line at 33. Don't do anything, just trade the method. Get short at 33. Hit your bracket, gets you short at 33, and automatically is going to put 10 ticks gain. And then you can use another line and just it's easy to know where 8 to 10 is. If you see 10 here, you're going to know where 8 is, but if you want, you can draw a vertical line and pull it down there and have an automatic in your menu here, plus 10, minus 13. So when you hit one button, sell button, it puts the brackets in automatically for you. And then you just figure if that price goes down to 25, if it goes plowing down through 25, I'm going to hit my exit button. If you use a limit at 10, keep in mind that for the crude oil method, probably about 70% will hit the 10 ticks, 7 out of 10. But you don't want, and I've seen it so many times, I trade it light every day now for over a year, in the room in front of a lot of people who are watching my every move, and they're trading it themselves, and it'll run 8, it'll go 8, 9, 14. And you, of course, the first human instinct is say, it'll come back, it'll come back. Well, it might not. And then you start working the filter up here, like say that didn't happen here. It went 9 ticks, you had your limit for 10. Now it's up here and you go, it'll come back, it'll come back. Well, now you have to go to the next step, which is the trade that's not working out, using these filter lines to get out of the trade. I use the filter lines, and if I see a counter, I watch if we get a counter colored candle, in this case a green candle, and if I see that arrow just blink once, because it's set up live, it won't lock down when it first blinks. It'll blink and then lock down when the candle closes. But if I see that arrow even blink, I exit the trade immediately. Why? Because the algorithms of Boomerang are telling me that that little micro trend that we wanted to scalp is failing. It's just, even if they end up going back down again, it's getting water thrown on it, I like to say. It was hot and ready to go, but now water is getting thrown on it by this blinking arrow, and I'm out. Now keep in mind though, short at 33, and say this only went 9 ticks and you didn't scalp them out, you get a counter neutral colored arrow. Now you get a green arrow and you go, uh-oh. You're observing the dynamic trend bands in the filter, and you're just kind of waiting a little bit longer, hoping that it goes down again. The arrow blinks and you hit your exit button and you got out at say 34, 35. 2 tick stop. Painless. Totally painless. You see that? That's the way we trade crude oil Boomerang. And another thing you can do too is while you're down here and you're saying, okay, they're going to go back down again, and all of a sudden you see what? Right here. What do you see right here? Volume shift. Uh-oh. You got a volume shift here. Yeah, the momentum's back on the zero line here. The force index is on the zero line, but you've got a crossover and a color on this one here. You got a color change on the 2 momentum indicators telling you the momentum shifting to buying, the buying volumes coming in. Now you got a histogram. Up to you. You can wait for the arrow to blink, but that trade looks like they're going to squeeze the shorts, which is you if you didn't get out here, and better to just jump out with a painless 2 tick loss. So that's the method exactly that I use in the room, using the additional tools of the price pressure bands and the filter over the regular Boomerang rules. So with that in mind, that ends our seminar for today. I thank you very much for watching it. It went a little bit longer than I expected, but it was very thorough, and that's what's important. And you can always watch it tomorrow when I post it, the recording, on the blog, and you can stop and start it and reverse it. Once you have it on YouTube, you can drag it, pull it back, and go over stuff again that I said and watch it 10 times. I often do that until I go, okay, I get it now. Sometimes I'm a little slow sometimes. I look back at my trading career and I go, boy, I wish I would have been a little smarter. But anyway, you know, trading's a complicated business and there's lots to learn. So we're doing our best to help you learn how to be a futures trader, decide if that's what you want to do. And what we'll do now is we'll end the webinar here for this training. And thank you very much for joining with us. And if you have any questions at all, always feel free to email me at mohan@daytradersaction.